गुरुदेव ये आशीष दे जो सोचने का फर्ज है। हम हो पुजारी तत्व के, गुरुदेव के आदेश के, सच प्रेम के नित नेम के, सधर्म के सत्कर्म के, हो चीर झूठी राह की, अन्याय की अभिमान की, सेवा करन को दास की, परवाह नहीं हो जान की। छोटे न हो हम बुद्धि से, हो विश्वमय से ईशमय, हो राममय और कृष्णमय, जगदेव में जगदीशमय। हर इंद्रियों पर ताब कर हम वीर हो अति धीर हो, उज्ज्वल रहे सर से सदा, निज धर्म रख खंबीर हो। अति शुद्ध हो आचार से, तन मन हमारा सर्वदा, आध्यात्म की शक्ति हमें पल भी नहीं कर दे जुदा। इस अमर आत्मा का हमें हर श्वास भर में गम रहे। गर मौत भी आ गई, सुख दुख हमसे सम रहे।
तो चालू है? हाँ। Good afternoon, everyone. Good afternoon, Jay Kumar Tejwani ji, Suraj, Kanika. So, I welcome you all in this fourth webinar of August, which is basically on the global taxation. In last two webinars, we had discussed UK taxation, UAE taxation, and now this third U, that is USA taxation, which we shall be discussing today. And we have expert Shri Jay Kumar Tejwani ji, Suraj Singh with us. Kanika is also there with us as a speaker. So I first request Tejwani ji to please have your keynote address to all of the participants here on the USA taxation, and then Suraj and Kanika can take it forward. Thank you.
I can start. Yes. Yeah, good afternoon, and thank you, Bhupendra ji, and thank you everyone for joining this wonderful session, which is basically the overview of the USA direct taxation. And in this session, we are going to look at the American direct tax system. And please note that this is not a comprehensive manual, but only a map, just giving the broad ideas as to how the US tax system works. And the figures which are used in this presentation, they belong to the tax year, which is the calendar year they follow, 2026. And for information, the American law had gone a substantial change. And in fact, it was almost rewritten in July of 2025. And online, you still find the old data, which may or may not match with what we are presenting today. So with this, let me introduce the two speakers that we have. Suraj Pratap Singh. You all know him. He was our presenter in the wealth and management of how best we do it. And then we have a very young girl and very excited, Karnika Garg. She is also part of the presentation today. And for Kanika, let me just shape up the session before you begin. And we all understand how actually it works. And we are going to start with the architecture of the US taxation. We are going to understand where the taxes are levied in America, who is taxed, and on what income the person pays the tax. And the most important concept which Kanika is going to cover is when does a person becomes a US resident? And also, in short, we are going to talk about how the tax return is built up for the year of 2026, what forms are used, what kind of penalties are livable in case the returns are not filed in proper this thing. So this is what we are going to cover in module 1, 2, and 3. Module 1 and 2. Module 3 and 4, they are very, very important. And in fact, 3, 4, and 5, which I'll of course be talking before we start those modules, which could be critical for all of us who are practicing in India, because these are the cases where the client asks us, what kind of formation they can do in US, what is inbound and what are the outbound routes. And finally, under the fifth module, which is outbound, we are also going to touch base on the Indian transfer pricing, the DTAA provisions, and also understand the penalties that as to how they sit in the American law. Okay, and feel free to ask questions as we go. And so let's start, and I'll request Kanika to please be starting with the architecture. But before that, Kanika, a very, very important thing which I need to be discussing, that why we, the Indian chartered accountants, need a working knowledge of the US tax. Of late, a lot of outsourcing of not just the accounting and bookkeeping, but also of the US tax return filing is being done to the Indian chartered accountants. And you can just see these four numbers on your presentation slide. One is 30%. So what is 30%? 30% is the withholding, minimum withholding tax, which America levies when they pay you, that is you, an Indian, any kind of money. Of course, without considering any treaty benefit. $10,000, which you're seeing here, is the minimum penalty, even if you miss the filing of a single form. That may not carry even a single tax. Maybe tax wise, it is zero, but penalty if you miss a form is 10,000. Then the next figure that you're seeing is 60,000. So if a non-American, say an Indian, holds the asset in America, the asset is subject to estate duty at the rate of 40%. The only exemption allowed to that non-American person is $60,000, so very minimal. And finally, you see 21%. This is the maximum corporate tax rate which American applies. So this is how, and maybe the next slide, Kanika, is the architecture which I'm requesting Kanika to please take it. And Kanika, as you're going to talk about the federal taxes, the state taxes, let's concentrate more on the federal taxes, but do touch base on the state as well as the local taxes. So over to you, Kanika.
So we'll be starting with the US taxation. which is basically following three-layer system. The very first one is the federal layer. Federal layer is the central level tax which everyone in the US has to pay, where the individuals are taxed at the rate of up to 37% as per the slab rates. There is a federal corporate tax of flat 21%. And there are several other taxes also, like social security, Medicare taxes, estate, and their taxes, which is very similar to our Indian taxes. There's the second layer tax, which is the state level tax. Each 50 state has their own legislates, which they can tax at their own different levels, and taxes are differently applied. There are some states in which there are no taxes at all at the state level, which are Texas, Florida, Nevada, and Washington. There is a corporate tax at state level of up to 11.5%, whereas the personal income tax is up to 13.3%. In US, the state tax is levied on the basis of economic presence. A state can tax a business with no office there, but where economic presence present. The third layer is the local layer, in which different cities have their own taxes, like most visibly New York, OU, and Pennsylvania have their taxes. New York charges its own resident income tax, but the main income tax on the local level is the property tax. Let's begin with the next slide. That is, who is taxed on what? The person who are US persons, how they are taxed. In India, we are taxed as per the residential statuses. There are three different resident status. The first one is ordinary resident, not ordinary resident, and non-resident. But whereas in US, the individuals are taxed on the basis of citizenship, green card holders, resident by day count test, and non-resident individuals. The companies follow the same system as in India. Domestic companies are the US companies, and the other country companies are foreign companies. US citizen, green card holder, and resident by day count are taxed on the foreign source income as well as US source income in the US as per the US regimes. Whereas for non-resident individuals, the income is distributed in two portions, like the US source income and foreign source income. US source income will be further taxed as on the business income, it will be taxed on net profits, whereas on the passive income, they are taxed at flat 30% rate. The foreign source income of non-resident individuals will not be taxed at all in the US returns. The forms used for return filing in US for US citizen, green card holder, resident by day count is Form 1040, whereas for non-resident, the form is Form 1040 NR. For the companies, the US companies, it is taxed at federal level at flat 21%, the US based income, and the foreign source income is also taxed in US by taking the foreign tax credit. The form filed for US companies are Form 1120. For foreign companies, it is similar to non-resident individuals. And the income of US source income is classified as business income and passive income. Business income is taxed at 21%, same as US companies. Plus, there is a branch tax at US source income. Along with that, the passive source income is taxed at 30% flat rate, whereas the foreign source income is not taxed. The return filed for foreign companies is Form 1120F. Along with that, it is any person, any individual who is holding citizenship or green card wherever he lives in whole world. It doesn't matter if he is living in India or in any other country. He has to file a US return along with the reporting disclosures. If he ceases to report, he seizes his green card or citizenship, then also after ceasing, it has to file US returns for the 10 years.
Yeah. So the two differences that we have. Next slide.
The three persons becomes taxable in US as a resident. The first one is citizen. Who is a citizen? A person by birth, by descent, or by naturalization can get his citizenship in US. It is not lost by living abroad. The person living abroad or wherever is not losing his citizenship just by living there. He has to formally renounce it, which has its own tax cost. The second person is green card holder, which a person can apply for as per the permanent residency status at any time in the year. It continues until the card is formally surrendered. The third one is day count test, a test which is applied for any individual who has been in the US for 31 days in the current year has this test applicable on it, which is for 3 calendar years. By this, the US government catches the frequent uh, business travelers or the deputed employees. The day count formula.
Let's take example names.
Let us understand the day count test with the help of an example. We have taken an example over here for an Indian resident, Mr. A. Mr. A is employed by an Indian software company who travels to the US for the project meetings. For the year 2026, he spent 130 days in US. For the previous year of 2025, he spent 120 days. And for the year before the previous year, 2024, he spent 120 days. For the day count test, we have to take the weighted number of days of 3 calendar years. For the current year, it is 130 days into 1. For previous year, 25, 120 days into 1 by 3, which will be 40 days as weighted days. For the year before previous year, 2024, it is 120 days into 1 by 6, which will be 20 days and the weight count. The total of 3 calendar years is coming to 190 days, which is more than 183 days. Here comes the resident, Mr. A, becomes the US resident for 2026 tax year. And his Indian salary and Indian interest are also taxable in the US returns. He has to report his foreign source income and US source income in the US returns. What saves a person in the residential statuses is the first one is the tiebreaker rule in Article 4 of India-US Treaty. And the second one is closer connection exception. Both needs a US return disclosure form attachment. The sting in the state is that winning on the tiebreaker relieves income tax, but it does not relieve the duty to report foreign bank accounts and assets. Any missing statement, any missing reporting in the disclosures carries its own penalty of minimum $10,000.
So, no,
So you can speak.
Very nicely covered, Kanika. Let me just summarize what you said. Number one, as Kanika rightly mentioned, that there are 3 layers of direct taxes in America. 3 layers, please remember. The first one is that America, in terms of 3 layers, one is the federal tax, which we just discussed, where the taxes could go up to, for individuals, could go up to 37%. The corporate tax is 21%. Then Social Security and Medicare together will go around 7% plus. Then there is estate and gift tax as well. And the most important is the withholding tax rate is 30% in case any payments are made to the non-residents. This is what she covered. And then the second is that all the 50 states, except for few cases that she pointed out, they also have the right to tax the income. Of course, their maximum tax rate could go up to 11.5%. And in terms of local taxes, generally they are municipal taxes, except for New York, which at times could levy some taxes on the income. So these are the three layer of taxes which we talked about. And then we also understood the meaning of the citizen of US. Very, very important for all of us to understand. Okay. So, but in terms of taxation, a person who is a US citizen, not just a resident, he is taxed on the worldwide income. And who is a US citizen? Somebody who is born there, who is domiciled there, who has his ancestors in US. Second test is if he is a green card holder. So these two categories combined together makes a person a citizen of US. And I'm talking only about individuals. And even somebody is staying abroad, not in US, they still would be considered as citizen and their return would be filed in US, declaring their worldwide income plus their assets which they are holding abroad. And even if they surrender, they surrender their green card or they take up the citizenship of another country, the condition of filing the return as a citizen continues for 10 years. So I am a green card holder in the year of 2026. I surrender it till 2036. I still will have to file the tax return in US as a citizen declaring my global income. And in case I don't surrender my green card, it's an unlimited number of years that I keep filing. So then second category is the non-US tax residents or individuals. In case of a non-US, as she rightly pointed out, it is only the American source income which is taxed there, not the income earned in other parts of outside India. And then, of course, she mentioned how a person becomes a US resident. One very important in the example that she took was about the day count situation. That is third one. Like in India, it is every year, we check the 183-day condition or conditions which are specified in 6.1. But it is a yearly test. In America, we do it every year for the previous, including 1 + 2 previous years. So in case the formula that they have given, the weight that they give to the current year 1, the previous year 1/3, the year prior to the previous year 1/6, in case that adds up to more than 183 days, you still become a resident. Okay. And in case you become a resident, then worldwide income gets taxed. And the only way out, as was noted in the presentation, was that in such a situation, an individual can take the treaty benefit. Like India US Double Taxation Avoidance Treaty says that there are tiebreaker rules in case you are becoming a resident of both the countries. The tiebreaker rule is where is your permanent home? Where are your economic interests? Which is the place you habitually abode? So quite significant number of times we are able to come out of the situation of being a resident individual. So these are some very, very fundamental concepts when we are dealing with the client requesting for the American taxes. So now I'll be requesting Suraj to take up the next slide, which is on the taxation of individuals. How a US return is built up. What are the tax rates? What are the deductions which are allowed? What are the reliefs which are available? So Suraj, over to you.
Yeah. So, if we go on to analyze how a US return is built up, so first of all, what we do is we add up all the sources of income from whatever source they are derived, for example, salary, business income, interest, dividend, and so on and so forth, and take up the gross income. right? On this gross income, there's a specified deduction available, which is in the nature of, say, retirement contribution, health saving account, etc. After adjusting for these expenses, you get the adjusted gross income, which is AGI, right? Now, out of this AGI, once all the credit have been utilized earlier, you can have two ways of claiming another deduction, which is itemized deduction or a standard deduction, right? Standard deduction means it could be 16,100 for a single filer or 32,200 for a married couple. I'll tell you what this filing actually means, but that is the standard deduction that you get from the total overall income, right? Adjusted income. Or you can take an itemized deduction for the allowable expenses that you have done. This could be in the nature of state taxes, mortgage interest, or in case of charity. Now, after doing this, what you get is the income which is still including some business income. If there is some business income there, you can get another 20% of the income as a deduction, right? From this arrived income, what you do, you compute a tax, right? And then you add a payroll and investment income tax separately. So what is a payroll and investment income tax? Payroll tax, I'll come to that later. But investment income tax is simple as a LTCG or STCG in India, right? After you have arrived at the tax figure, you deduct the foreign tax credit, and this is the amount of tax that you need to pay, right? Even if the taxes are zero, you still have to file the forms that Sir and Kanika mentioned earlier. Now, for individual, the slabbing is in the same fashion as it is in India, right? So it will start at the rate of 10% and go as high as 37%, right? On the tax that you derive, on the income that you have earned, you can have a 16,100 deduction, standard deduction, if you're filing singly. So a single person can take a 16,100 deduction. A married couple can have a 32,200 deduction if they're filing jointly, right? So in USA, there's a concept of joint filing in case of a couple, right? So if a couple is joint filing, they can have a 32,200 deduction. After you have got this deduction, you compute the tax, and you will pay additional state tax on top of the tax that you have got. Correct? Now, there could be other sources of income as well. You can have capital gains, right? For example. So let's discuss what capital gains look like. So very similar to India, capital gains are again taxed in a separate fashion, right? So there are two ways of assessing capital gains: short term and long term. So in USA, anything less than 1 year is treated as short term. The only difference is that the short term is clubbed in your ordinary income. It becomes a part of your ordinary income, and it is taxed as per the slab rate. For long-term capital gains, there could be different rate of taxes, 0%, 15%, 20%, depending on the income, right? And depending on the person who's earning the income. And now the dividends are again qualify for the from the US company, which is the domestic company per se for USA, will be taxed in a similar preferential rates of 0, 15, or 20%. Now, the second point of difference, the first point of difference was this short-term capital gains will be clubbed to your normal income. The second point of difference is that if your investment income, which is LTCG, STCG, happen to be more than a certain level, which is $200,000 for a single and $250,000 for a couple, there's an additional tax of 3.8% which will be levied. So if you have a capital gains, long-term capital gains, suppose taxable at 20% rate, and you have the amount of gain is more than $200,000, in that case, you will be taxed at 23.8%. Now, there's one more difference, starking difference, that in case of a main home is defined as a house that you have been living or using for 2 years out of the last 5 years. If you sell that house and the income from that house is up to $250,000 or $500,000, that amount will not be taxable, right? Now, There's one last point of difference which I want to highlight here, that the capital losses can be set off against the capital gains in full, and the balance of the capital losses up to an amount of $300,000 can be adjusted against other incomes as well. Right? So these are the few differences in terms of capital gains. Now let's talk about someone who's earning a salary income, right? For someone earning a salary income, there are two additional taxes which are always on the top layer, right? Before anything starts. So first is the social security tax, which is 6.2%, right? And then there's a Medicare tax, which is 1.45%. Okay. Combined, it becomes 7.65%, right? And for someone who is self-employed, this becomes just the double 15.3%. So every time you're dealing with a US client, Ron, can you present the slide, please?
You, I नहीं दूंगा. 1 minute.
Yeah.
USA Taxation. Slide number is
10. Slide number 10.
10. Slide.
11, in fact, 11.
Yeah. Next.
Yeah. Can you go to the next slide, please?
Next slide. Yes.
Yeah. So whenever you have a US client, right, there's a person, suppose, who visits USA a lot, right, and happens to qualify for 183 days limit, which Kanika discussed earlier, or a US filing client, you have to tell them, sir, whatever income you're going to derive, you have to first account for 7.65% as a top line deduction from there, right? And after that is what you start to compute the income for any person. So we'll also take an example for this. Can you go to the next slide? Yeah. So now, before the example, in fact, what are the reliefs which are available, right? So what I've told, that a person who is resident anywhere in India, anywhere in the world, if he's a green card holder, he's going to be taxed in USA as well. What are the mechanisms that he can actually use to safeguard the tax liabilities? So the first route is to have a foreign tax credit, right? Pay tax in one nation and take the credit for that tax paid in USA when you are filing the return, right? The second way is to have a presumptive kind of system in place where you will have a exclusion of foreign salary, right? So there's a condition that he has to be for at least 330 days or out of 12 months, he has to be resident abroad, right? In that case, he can take 1,32,900 salary away and pay tax on the balance. Correct? Now, once you use this scheme, it is logged for 5 years, right? So we'll take an example. Can you go to the next slide? Yeah. So let's take an example. So let's take an example of someone who's a single, right, person and has been in the US since 2024 and is a US resident for the year 2026, right? Now, let's suppose he earns a salary of $1,80,000, right, and is earning an interest from the US bank to the tune of $4,000, has a long-term capital gains on the US shares, which is $30,000. In Indian deposit, he has $4,800 as interest, out of which 1,440 has been a tax deducted. He also contributes 23,500 to a retirement plan. How will his tax computation look like? Let's discuss that, right? So he has earned $1,80,000 in salary, correct? Now, because he has made a deduction which is more than 7.65%, that is deductible here, right? So 23,500, which is retirement plan deduction, he'll get, and we'll take 1,56,500 as the starting point. In that, we'll add both the interest of US bank and Indian bank. Why? Because global income becomes taxable in USA. We'll also add the long-term capital gains that he has made. This brings his total gross income, adjusted gross income, to 1,95,300. On this amount, he can take a standard deduction. Why 16,100? Because he's a single status filer, right? If we see the first line, he's a single status filer. We are giving him a deduction of 16,100. His taxable income comes to 179,200. Uh, on the income which is without the capital gains, if we take out the capital gains of 30,000 here, and we apply the slab rate on 149,200, say the tax comes out to be 28,180, right? On this 28,180, he'll be will add an additional tax of 15%, at the rate of 15% on the capital gains that he has made, right? He will be allowed the credit of Indian deduction that was made on his income, right? Now, if we consider that, what is the federal tax that he has to pay? 31,240, correct? Now, on the top of it, he'll also pay state tax if it is applicable, correct? Now, what we generally happen to, or someone happens to miss out on, is the fact that he'll also be required to report certain things. What are those reportings? If he has a foreign bank account in which he has more than 10,000 USD, he has to report it, right? On foreign assets, if he has more than $50,000 in foreign assets, he has to report it. And if he has Indian mutual fund or any foreign mutual fund in context of USA, he'll have to report it. Now, if he does not report that, his penalty again will not be dependent on the amount of tax that he has to pay, right? The penalty or on non-filing of forms will be a flat penalty in irrespective of the amount. Here it's 31,000. Even if it was $100 also, the penalty would be flat. Correct? Can we go to the next slide? Last. Yeah.
Back. I think, yeah, this slide.
Yeah. So one on the lighter side, it's very important to understand that standard deduction for being a single is 16,100. And if you are married filing jointly, it is 32,400. So 32,200. Why this single and married? America, and this is again not to be recorded, and if recorded to be deleted, that, the marriage is something very, very difficult in America. And even if people are married, most of the time, they are very upset with each other, not very keen in terms of communication. तो गवर्नमेंट ने कभी सोचा कि क्यों ना हम इनको एज अ मैरिड कपल कुछ बेनिफिट ज्यादा दे दें, इनको स्लैब भी ज्यादा दे देते हैं, स्टैंडर्ड डिडक्शन तो चलो डबल कर ही दिया, तो therefore the standard deduction double, the slab threshold double. और अभी भी क्या होता है, they find that lot of people who are classified as married, they don't file jointly. तो उनसे पूछते भाई क्यों नहीं फाइल करे, नहीं, we are not happy, we are living apart, she doesn't talk to me or he doesn't talk to me, I don't like, maybe we are going to get divorced. So अभी भी वो challenge है, despite they are giving so much benefit. अगर यही हमारे इंडिया में होता, everybody, believe me, we would have been filing the joint returns. But can. Now let me get back to what was very nicely explained, that how the individual tax return is built. It is very simple for us to understand. हम Indian CAs बहुत आराम से समझते हैं कि सारी incomes को आप ले लीजिए, income, salary, आपकी business income, net of expenses, आपके interest, dividends, capital gains, सबको ले लो. And if you have any share in the partnership profits, take it. That is called gross income. Is gross income में से भी there are certain deductions which are allowed. जो इंडिया में नहीं है, because इंडिया में everything is in your P&L account. But वहाँ पे there are certain specific deductions which are allowed. Like if you have contributed to the retirement contribution and health savings, which we discussed is 7.65, and if you are a self-employed double, you can take that amount as a deduction. If there is any student loan which you have paid interest on, if it is not forming part of your P&L, that can be deducted. So these are certain items of deduction. तो ग्रॉस इनकम में से आप ये माइनस और कर लो. अब जो भी बचेगा हम उसको नेट इनकम कहते हैं, वहां पे उसको एडजस्टेड ग्रॉस इनकम कहते हैं. ठीक है. उसके बाद इस ग्रॉस या एडजस्टेड ग्रॉस इनकम में से we deduct the standard deduction, which is 16,100, and in case you are married, double the amount. And then the taxable income is arrived at, pay the taxes as per the slab which we discussed. So for us to understand it very easy, और जब हम यूरोप में इस लेसन को लेते हैं, उनको समझ ही नहीं आता कि सर ये क्या चीज है, ये क्या डिडक्शन और क्यों दे रहे हैं. You know, they ask some very innocent questions of why salary is fully added. Why can't we, there's so much of spendings. But Indians को कोई वो नहीं पड़ता because हम तो यहाँ पे इतना taxes देते हैं हर एक चीज पे. So this is what he discussed in one of his slides. And second, of course, we talked about the federal taxes. Usme again, the thresholds and the tax rates, etc., were defined. One of the very important slides that he talked about was the capital gain taxes. So, as he mentioned, I'm just repeating the capital gain. One is the short-term capital gain on which the ordinary tax rates may apply. And in case it's a long-term capital gain, again, bifurcating between the property where you are living and otherwise, the tax rates could be much lower. Keep this slide in mind because a lot of queries that we get, particularly from the people who are America returned, this question really comes up where we need to have a basic and a broad understanding to answer it properly. And the relief from the double taxation can always be taken from an Indian perspective. If there is any income which is getting clubbed in your global income, and if there are taxes paid in India, that can be claimed as a tax credit. And this is exactly as per the DTA, which India has entered with USA. So please remember that tax credit can be taken as per the DTAA, not as per the domestic act. So most of their DTAs with the advanced countries like Europe and Canada, they are basically, they say that exclude the income, exclude the foreign income altogether, because they equally are at the same band, so they don't worry about adding and then taking the credit. Tax rates, etc., are all high. But in case of countries like India, which earlier was called the developing country and it is now a progressive country, we add the income, but tax credit is given of the taxes which are paid. So this again, becomes very, very important. And a very nice example was taken by him, where, of course, he took the example of one Mr. C, who was single, who filed the return singly. Of course, he was unmarried. And I think everything was very nicely explained as to how to add the incomes, take the basic deductions, and pay the taxes. This slide again becomes very relevant for all of us, as in when we have to be dealing with an American client. But one important thing which I think we must know is the irrespective of whatever benefit you get as per DTAA. But if you have become a citizen of US or a resident of US because of the day count days, maybe you're getting the tax relief or the benefit, but the relief which you're not getting is the disclosure. You still have to, a person has to still disclose the holding in, say, the Indian mutual funds. In the bank accounts, if it is beyond the threshold. So our advice here is, which we also consider whenever we are dealing with a US person, that these basic broad concepts should be in our knowledge and in the knowledge of the person. So this is how the individuals, the tax rates, and the characterization works. So Suraj, I request you to take up the next portion, which is
Business entities.
the business entities. Yeah, business entities. And I'm sure, Suraj, you are going to talk about uh, the vehicles which are common. And again, I can see that we are going to talk about very, very important concepts of what is a C corporation and what is a S corporation, and what is the difference between the partnership and the LLPs. Okay, so I request you to please take up and
Yeah.
progress with the business entities. Thank you.
Yeah. So we have discussed about the individual taxation, right? The overview of it, individual taxation. There are other forms in which one can participate in the US earning from US and hence being taxable in US, right? So unlike India, there are two major tax differentiation in terms of corporations, right? So corporation is nothing but say a company, right? C corporation is a company which is looked at as a company and taxed in its own rights, whereas S corporation is a company where every profit is said to be passed through to the owners ultimately. What does this mean? Is that C corporation will be taxed at two levels. Once when it earns the profits, and second when it distributes the profit, right? When it distributes the dividend. So in the own accord, it will be taxed at 21%. And when it is distributing the profits again, it will be again taxable. There would be withholding tax and there would be dividend distribution tax when the dividend will be distributed, right? Now the S corporation will be taxed only once, which means in the hands of the owners of the shares of the company, right? Now anyone who wants to set up an entity in US, from the tax angle, they would like to set up an entity in the S corporation route. But US taxation law has not allowed a non-resident to open a company in the S corporation, right? So ultimately, you have to file, become a C corporation for the US tax laws, right? The other ways of participation are similar as in India. So, for example, you can set up a partnership firm or an LLP. But the only catch here is that it is just worked in the reversed way of how it works in India. So in India, a partnership firm is taxed for its own profits, and the partners get the share in the profit tax free. But in USA, the share of profits in the partnership firm are taxed in the hands of the partners. What does this mean? Is that the partners are subject to 37% tax. A corporation would have been subject to a 21% tax. Now the partners are because the partners are taxed in their own hands. This profit will be taxed at the slab rate and not the firm rate. So this is something that we need to keep in our mind. The other form of participation is in LLC. LLC is nothing but like a one-person company. You have created a company and you are singly managing it. Now the US law says that we are not going to consider it as a company, and you are going to be taxed in your own hand, right? Now, the other way of participating is again a sole proprietorship form business. So you are going to set up a business in a sole proprietor form and going to do business. Now, it is very similar to what you will do as a LLC, a single owner LLC, but here you will be subject to an additional professional tax of 15.3%, right? So if we go on to the other slides, the next slide, please. Yeah. So, so if you see this slide, the blue part specifically, and you are setting up a C corporation, what you will suppose you are earning $1 million, right? Your company will be taxed at 21%, and you will get $790,000 in your pocket, correct? And if you start to distribute this profit, you will be subject to another withholding. right? So what is the way forward? How does one actually do it? So if you can go to the next slide, there's an example. Yeah, this example is very, very important to understand. What does this mean? There's a person, there's a say prospective business owner who suppose will earn $1 million in USA. How does he structure himself? See, S corporation is blocked for him. He cannot open a S corporation. What he can do, he can open a C corporation, right? He can open an LLC, or he can open a partnership firm. If he was to go on and open an C corporation, he will be taxed at a 21% flat rate, right? And the moment he starts to distribute that profit, he'll be again subject to withholding. If he opens an LLC or partnership firm, the concept of partnership firm is virtually not existent. He'll be taxed in his own file. Now he'll be taxed at a 37% highest rate. Now, there's a deduction. If you see the yellow box here, there's a 20% deduction which is given to businesses, right? If it is a eligible business. Now, suppose he takes that 20% deduction, his taxability comes to, in the LLC or partnership firm form, comes to 33.4%. And if he does not qualify for that deduction, he does not take that deduction of 20%, his taxability goes to as high as 41%. Right? And for C corporation distributing the profit, the tax rate is 39.8%. So what is the way? Is if someone actually wants to settle down in USA, wants to have a locus of interest there, what is the way? Right? They can set up a C corporation in USA and not distribute the profit. If they do not distribute the profit, there is no withholding tax, and the effective tax rate comes out to be 21%. But eventually, it will come out at some point in time. But for that particular year, it can be limited to 21%. Right?
Thank you, Suraj. So let me just take up the last part, because again, very common that when an Indian promoter or a company approaches us, what do we advise them? So we tell them you open a C corporation, because that is just like an entity independent in nature set up in US. फिर पूछते हम setup कहाँ करें? सबके state taxes and municipal taxes, and what do we do? So we tell them the easiest state to set up is the Delaware. So Delaware में regulations are very simple, and their tax rate is starting from 0% and could go up to the state tax, maybe 1 or 2%. Or सबसे easy है to open the bank account, do the filings, and even in terms of their penalties. Penalties are, of course, federal in nature, but then they give lot of relaxation. So first thing when somebody approaches us, if they have an idea where to form, it's fine. Otherwise, C corporation. And as pointed out, C corporation is at a flat 21% tax rate. Initially, don't distribute any dividend. And I'm sure, like in India, for any proposition for someone to build a business, that sounds very good. So pay 21% tax, retain the profits for the growth. But one mistake that we see and which people always make is that people, they set up a Delaware LLC with only them as single member. They believe that it works like a private limited company, a separate entity, or a limited liability tax, but it does not. Delaware is a simpler, good state, but not as a single promoter. For America, LLC, for a federal tax purposes, LLC with a single member is always ignored. And its business is treated as being carried on by an individual, which means that he himself is doing business in US. He needs all the American numbers, but he doesn't get the benefits which a corporation is entitled to in America. So even Delaware is fine, but advise that let it not be a single person company, because he loses the shelter of a company. And this is what I guess S company and C corporations is what we just discussed. And the example which he took again was very important. And the bottom line was that S company may be exposed to higher rate of taxes or may be subjected to the slab rate of taxes, but a little complicated. So it is actually not allowed for non-residents to set up a S company. तो अगर हमारे पास कोई क्लाइंट आता है तो हम उसको एस कॉर्पोरेशन सेटअप करने के लिए एडवाइस नहीं कर सकते, because it is not allowed till you become the resident. And the second category is the C corporation. Like in India, we have 22%, they have 21% flat tax rate. Then the partnerships, individuals, they all are governed by the slab rates. So very nicely covered. Now let's move to the most important, the inbound module. What is inbound? And if Suraj, you can take up this slide as well.
Yeah. 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 So can you go to the next slide, please? Yeah. Now, when is the income treated to be coming from USA, right? So there are different types of income we have jotted down: interest, dividend, service, rent and royalty, and sale of goods, right? So in case of interest, it is said that wherever the interest, the law says that wherever the payer of the interest is resident, that will be the source of the income. So if a US company or a US person or a US bank is paying the interest, it will become US source income, right? In case of dividend, a US company paying dividend will become US dividend, right? In case of services, where the service is physically performed, will become the source. So if the service is physically performed in the US, it will become US source service income. In case of rent and royalties, where the property is used or actually exploited, the right is exploited. If it is exploited in US, it will become US source income, right? For sale of goods, where the title terminates. So if a particular goods are sold and the title terminates in USA, it will become US source income, right? And in case of sale of property, it is the rule of situs कि जहां पर वो actually situated है, if it is situated in US, it will be US source income. Correct? Now, let's go to the other side. Next slide. Now, हमने ये समझ लिया कि what is a US source income. Now, is US source income say how is a person actually taxed, right? So, in case of business income of USA, it is very similar. So, how it happens? You get a 21% tax, right? On this 21% tax, suppose you have also paid some tax in the other country, you will get a treaty benefit and you will get a credit of that tax, right? Now, if you are just owning a right in USA, suppose you are owning you have a deposit or you have a share from which you are getting a dividend or you're getting a rent or a royalty, which are a passive income, right? You are not doing a business. You are not doing an active engagement in USA. You are getting a passive income from USA. In that case, it is taxed at a flat 30% rate, right? With no deduction at all. The only guard that you have is the tax treaty benefit, but that tax treaty benefit in itself is not automatic, right? Just because the US or US India or any other country treaty exists does not mean that you are eligible to it. You have to subscribe for it. You have to actually file the forms for it and opt for the treaty. And if you go on to opt for the treaty, you can have a lower taxation, right? So again, let's break it down with an example, a simpler mechanism to understand. Let's take an example. In the next slide, what I've done is I've taken an example of a person, suppose an Indian software company, who earns say $1 million again from a US customer, right? So what could be the different outcomes that this company would come through? First is Suppose this firm does not take any treaty benefit, right? They do not form any form, file any forms, and they do not take any tax benefits, treaty benefits. There would be a 30% withholding on this $1 million, right? And the end pocket money that you will be getting would be $700,000 only. Correct? Now, in India also, even if you go on to try to take the tax treaty benefit, you'll only get a 15% tax treaty benefit. So 15% again becomes a dead cost, right? Now, suppose you are taking the treaty benefits, filing forms and taking the treaty benefits, and suppose this comes down to 15% as per the India-US treaty, right? In this case, you will get a 15% TDS deduction. In the first case, you did not take the treaty benefit. The second case, you take the treaty benefit, it comes down to 15%. And then in India also, you can take the treaty benefit again. Now, suppose there's a person who does not transfer any rights, right? He keeps the copyright. He does not transfer any technical knowledge whatsoever. He just gives a service, right? In that case, this is not a royalty, correct? Because the copyright is not transferred. It is not a technical fees again because it is not made available, right? There's a make available clause. We'll discuss it later, but he's not made available the knowledge to the end customer, right? So this does not become a technical service and a royalty. So this is not a passive income again, right? This becomes a business profit, and there's no withholding tax whatsoever, right? And he in turn receives total $1 million. So what has happened? Because of the way the advisory has flown, someone who could have ended at a 30% tax can be brought down to a 0% tax, right? Only by the use of proper advisory channel, right? So this is something we need to keep in mind when we are talking about inbound payments in the USA, the US context, right? Now, if we go to the next slide, when does an Indian company, you must be having this question कि taxable हो कब जाएगा? क्या क्या situation होंगे जहां पर हम taxable हो जाएंगे? So first is you are going to set up a entity in US. You happen to, you want to explore yourself into the US market. You carry on a business. The day you decide to carry on a business, you will become taxable in the USA, right? Second, you do not want to, you're not willing to, set up a whole business, but you are setting up a permanent establishment in USA, right? Which could be 120 days or 90 days, right? You set up a building, you set up a, office there, and you start to provide a service there. You will again become taxable in the USA, right? Or you set up a branch, right? You set up a branch, you do business, and you start to distribute the profit from that branch. In all these three cases, you become taxable in USA. Correct? Now, if we go to the next slide, yeah. So India-US treaty, how does it work? I would request, in fact, Jay sir to take this up, right? Uh, I'll just give you a basic understanding of it. Okay. So let's go to the next slide first. Yeah. Next slide, please. Yeah. Now, this is something very important, right? Because this happens to be missed out by Indian practitioners often. What happened was in India, the inheritance tax was abolished, right? But in US, the inheritance tax still is there. What does the inheritance tax basically means is whatever estate you hold, the day someone passes on from the world, that estate, when it is transferred to the next generation, it becomes taxable, right? For USA, the limit of how much will be exempt from estate duty is 15 million if the person is a US person. For a non-resident, this limit is slashed down to very low limit of $60,000. So if an Indian, suppose, holds an asset in USA, which is to the tune of $60,000, that will become taxable at the rate of 40%, right? Now let's go to the next slide and take an example on this. Right. Now, suppose one Mr. D is a resident in India, right, and not domiciled in the USA. He holds a US listed shares worth $2 million, a brokerage account, in a brokerage account, a US deposit, which is to the tune of $30,000, right? $300,000. And he also has an Indian mutual fund of 5 crores. Now, what will first become his estate on the day he departs? What will become the part of his estate and what will not? The US shares will become a part of his estate, right? The US bank deposits are not considered for the computation of uh, 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 the estate, right? Indian mutual funds, Indian bank accounts, these are not included, right? So $2 million becomes his estate. And on that $2 million, just $60,000 is excused. And on the balance, 19 lakh $40,000, he has to pay estate duty as high as up to 40%. Now, how could he have saved this duty? By using a few things. First, he could have gifted this shares to some of his relatives, right? Now, the gift tax is not there in case of intangible assets, right? Shares are considered intangible in USA and in any form for that matter. So shares are intangible. There's no gift tax on intangible assets. So this becomes exempt from gift tax and there's no estate duty, right? Or uh, but death is not something that you can ascertain on day one, right? So another way was how he actually participates in these shares, right? So he could have held the units of some other mutual fund of some other nation, say India or Netherlands or Ireland or any other nation, which mimics these US stocks, right? Why? Because a foreign asset is not considered again, right? So Indian mutual fund is not considered. So any other country's mutual fund will again not be not considered. This person could have simply bought another nation's mutual fund which tracks, say, US listed share, and that way he could have saved himself from the estate tax, right? So this was all about the inbound. Jasser will like to take the DTAA provisions.
Yeah. Thank you. Yeah, so before taking up the DTAA provisions,
So
certain
here,
practical things,
Suraj,
certain
here
practical.
Suraj,
Yes, yeah,
so
yes,
here
sir.
I would like to suggest that instead of, making any investment by any individual, suppose a company in India makes the investment in any company in USA. So in that case, because company is a perpetual entity, probably these issues related to transfer of shares will not arise.
Correct, sir. Corporations, trusts, these are the ways that one can use.
Yes, instead of
Yeah.
Yeah. Jasser will take that up as well.
No, that's all right. Yeah, I think you are right. Very right. But couple of very interesting things which I forgot. तो अभी
Yes.
हमारे पास क्लाइंट्स आते हैं ना, तो इंडियंस आते हैं, कहते हैं जी हम मैरिड हैं, हमें तो जॉइंट रिटर्न ही फाइल करनी है। और
हाँ।
सबसे ज्यादा इंडियंस ही हैं वहां पे, अदर देन अमेरिकन हु फाइल जॉइंट रिटर्न्स। तो हम कहते हैं आपको क्यों फाइल करनी है, वाइफ की ज्यादा इनकम नहीं है या वैसा वर्षा? कहते हैं इनकम कम है या ज्यादा है, बट वी गेट डबल द डिडक्शंस, हमारा थ्रेशोल्ड बढ़ जाता है। तो एंड दे फाइल द जॉइंट रिटर्न्स। और अमेरिकन देखते रह जाते हैं कि हाउ यू आर अर्निंग लेस देन अस एंड पेइंग सो लेस टैक्सेस। तो तो इंडियंस हर जगह बहुत ही अच्छा काम कर रहे हैं। और हमारी जो मैरिजेस हैं वो अमेरिका में सबसे ज्यादा सरवाइव करते हैं, जो उनकी भी नहीं करती। और अमेरिका एक्चुअली अवार्ड्स अस इंडियंस को इतने सालों की जॉइंट रिटर्न के बाद वो कुछ बड़ा सुंदर सा, दे विल गेट सम अवार्ड, सम ट्रॉफी, और दे आर इनवाइटेड इन सम स्टेट फंक्शंस दैट लुक एट दिस कपल, दे हैव बीन फाइलिंग जॉइंट रिटर्न्स फॉर इयर्स टुगेदर। तो ये एडवांटेज है ना। तो लॉन्ग लिव इंडिया। Okay, so what Suraj covered about the active and the passive income. Active is where you're actively working, earning, so that is active income, tax as per the slab rates. जो passive incomes and dividend, interest, house rent, royalties to a larger extent, they are in the nature of passive income and tax at a flat rate of 30%. Yeah. तो इतना ही याद करना है ना, वो एग्जाम्पल वगैरह थोड़ा कॉम्प्लिकेटेड है, बट कॉन्सेप्चुअली एक्टिव एंड पैसिव, एक्टिव मीन्स योर एक्टिव 21%, पैसिव इज व्हाट वी जस्ट डिस्कस्ड। और बहुत ही कॉमन क्वेश्चन आता है हमारे पास, बहुत सारे क्लाइंट्स आते हैं कि जैसे भूपेंद्र जी आपने बहुत ही करेक्टली पॉइंट आउट किया, वी आर एक्चुअली वर्किंग ऑन अ क्वेरी where the client holds the ESOPs of an American company. So post retirement, that amount is of ESOPs is nearly, per his calculation is around 10 million equivalent USD. तो अब इनका चैलेंज ये है कि if that is retained there, it would be subjected to 40% estate, and he is not willing to sell it because the stock is very, very growth oriented, doing very good, and he doesn't want to sell. तो अब उनका क्वेश्चन ये है कि उसको कैसे मैनेज करें, हाउ डू वी मैनेज द एस्टेट ड्यूटी ऑन दिस। तो वन ऑफ द ऑप्शंस व्हिच भूपेंद्र जी गेव वाज maybe set up a trust or a company in US. Trust is required, followed by a company, wherein the shares could be transferred to that trust. In turn, the trust could be run by a company. उस केस में क्या होगा, that the estate duty tax rate of 40% could be avoided. And lot of questions, lot of advisory we get on these topics as to how best, because now everybody is much, much above the 60,000 limit. And therefore, it could be a very, very good practice area of late that we are seeing. And what also Suraj pointed out, that as an Indian individual or a company, we can always get the treaty benefit. And what is the treaty that we are referring to? Let's go to slide number 24. Again, this is very simple treaty which we have summarized here. Number one, the India-US treaty. Again, very wonderful background which goes, and this is not to be recorded, please, that this treaty was effective from 1st of April 1991, और इसको बनने में पूरा एक दशक लग गया था. It took us 10 years to form this treaty, not to be recorded, please. So इसमें होता क्या था, पहले इंडियंस गए यूएस की, चलो हम ट्रीटी को डिस्कस करते हैं. इंडियंस लव द कंट्री, और अमेरिकन को भी लगा कि इतने अच्छे मेहमान आए, चलो. तो एवरी टाइम इंडियंस जाते थे, उनको अलग अलग सिटी में घुमाने ले जाते थे, और वो जो 3 हफ्ते का ट्रिप था, एक दिन रह जाता था और ये ट्रिप खत्म हो जाता था और इंडिया वापस आ जाते थे. फिर इंडिया में गवर्नमेंट पूछती थी क्या हुआ, हाँ सर कुछ तो हुआ. अब अमेरिकन आएंगे, अब इंडियंस भी बड़े स्मार्ट, अमेरिकन आते थे, कभी उनको गोवा, कभी गुजरात, कभी उत्तराखंड, उनके भी 3 हफ्ते ऐसे ही बीत जाते थे, एक्सेप्ट वो 1 डे, वो भी बेचारे चले गए. तो 10 साल ऐसे ही लगभग बीतने लगे और कुछ हो ही नहीं रहा था. दिस इज अगेन विथ लॉट ऑफ फ्रिक्शंस एंड ऑन द लाइटर साइड. फिर अमेरिका को लगा ये तो काम हो ही नहीं पाएगा, चलो अब हम इनको ब्राजील लेके जाते हैं ना, वो बहुत ज्यादा एंजॉयबल कंट्री नहीं है. इंडिया ने भी यही सोचा कि हम इनको दिल्ली लेके चलते हैं, वहां थोड़ा पॉल्यूशन भी है तो ज्यादा एंजॉय नहीं करेंगे. तब जाके 1991 में हमारी ये ट्रीटी फॉर्मुलाइज हुई. ओके, बट ये सब छोटी छोटी कहानियां जो हैं हर ट्रीटी के पीछे है. बट व्हाट आर द रेलेवेंट प्रोविजंस? तो सबसे पहले एक आर्टिकल नंबर 4 आता है इंडिया यूएस ट्रीटी में, जिसका टाइटल है रेजिडेंस. तो एज वी डिस्कस्ड इनिशियली कि हम लोग कहीं ना कहीं दोनों कंट्रीज के रेजिडेंट बन ही जाते हैं, बिकॉज अमेरिका हैज देयर ओन वेरी डिफरेंट रूल्स, particularly the day count or the green card or the 10 years. और इंडिया का सिंपल रूल है 183 days और 60 days in case it's less than 2 years. तो टाई ब्रेकर रूल एक ऐसा रूल है जो कि हमें एक कंट्री देती है वेयर यू बिकम अ रेजिडेंट. और इसके लिए आई वुड रिक्वेस्ट ऑल ऑफ यू टू गो थ्रू दिस बिन्नी बांसल केस, जो अभी बहुत ही रिसेंट टाइम्स में हुआ, कि टाई ब्रेकर रूल के द्वारा किस तरह से मिस्टर बिनी बंसल का जो रेजिडेंस है वो इंडिया में ट्रीट किया गया था. तो ये रूल काफी इंपॉर्टेंट है। सेकंड है आर्टिकल नंबर 5 विच इज परमानेंट स्टैब्लिशमेंट। तो एक कॉन्सेप्ट जो अभी हमने पढ़ा कि परमानेंट स्टैब्लिशमेंट अगर आपका यूएस में हो तो वहां पे 37% और इवन हायर टैक्स रेट लग सकता है। तो वो जो डेफिनेशन है परमानेंट स्टैब्लिशमेंट की वो थोड़ी रिस्ट्रिक्टेड है इन इंडिया यूएस DTAA अंडर आर्टिकल 5। वो डेफिनेशन कहती है कि इफ if there is a contract by an American being executed in India up to 120 days it will not be treated as a permanent establishment। या अगर आप सर्विसेज दे रहे हैं इंडिया में, कोई अमेरिका से इंडिया में आया है तो 90 डेज तक अगर वो इंडिया में है तो वो परमानेंट स्टैब्लिशमेंट नहीं कहलाएगा। बट इफ इट इज बियॉन्ड then you become a permanent establishment। India also treats it as the 40% tax rate, which is now reduced। अगला जो important article है between DTA is article number 7, which is titled as the business profits। India अभी भी बहुत lenient है, जितना भी attributable to India है, if there is an American company doing business in India, only to the extent attributable to India is taxed in India। And similarly, US also follows the same rule that whatever is attributable to America is taxed there। एक और आर्टिकल है आर्टिकल नंबर 10 एंड आर्टिकल नंबर 11 जो डिविडेंड एंड इंटरेस्ट को लेके बात करते हैं। इसमें दोनों कंट्रीज ने आपस में एग्री किया हुआ है कि किसी भी हालत में हम आपके 25 या 30% रेट पे नहीं आएंगे। ट्रीटी का जो बेनिफिशियल रेट है 15% इन केस ऑफ डिविडेंड एंड 10% इन 15% इन केस ऑफ इंटरेस्ट एज वेल। उसका ही आप हमें यू विल बी विदहोल्डिंग टैक्सेस एज पर दीज रेट्स। तो इससे बहुत बेनिफिट हो जाता है एटलीस्ट फ्रॉम अ कैश फ्लो परस्पेक्टिव। आर्टिकल 12 है which again is very important and the title is royalties and technical fee। इसमें भी टैक्स रेट इज डिफाइंड एट 15%। बट इसमें जो एक बहुत ही इंपॉर्टेंट बात है DTAA में that technical services will only be liable to tax in either countries if they are making available the services which are rendered। So as an example, if some American has come to India and the services which he is rendering to India is enabling our own team to do it on their own in future, तो इसको कहते हैं make available। सर उस केसेस में ही टैक्स कटेगा। अगर वो आया सर्विसेज देके चला गया जो एक रूटीन नेचर की है तो उस केस में कोई विदहोल्डिंग टैक्स ना वो काटेंगे ना हम काटेंगे। और उसके बाद आर्टिकल 13 बड़ा क्रिटिकल है कैपिटल गेन्स का। इसमें किसी को कोई रिलीफ नहीं है। जिस कंट्री में आपने कैपिटल गेन रियलाइज किया वो कंट्री ही है जो कि आपको टैक्स करेगी। एंड फाइनली विच वी हैव बीन डिस्कसिंग थ्रू आउट द सेशन इज आर्टिकल 24 रिलीफ फ्रॉम डबल टैक्सेशन। अगर कोई इंडियन इनकम वहां पे क्लब होती है तो इंडिया का टैक्स का क्रेडिट मिल जाएगा एंड वाइस वर्सा। सो दिस इज व्हाट वी डिस्कस्ड अंडर inbound। So Suraj, we have only 10 minutes. Okay, and I would request if you could take up the last on outbound. Thank you।
So outbound rules and compliances.
Yeah. Can you go to the next slide? Now, how does USA treat and taxes its own multinational organization on the profits, right? So suppose there's a foreign company in which US residents or say a big US company holds more than 50% of the shares, right? This company becomes a controlled foreign corporation for the US laws, right? Now on this company, whatever the profits are there, right? The portion of the profit, the apportionment of the profit will be done in a way that the US parent will become liable to pay taxes for the part which is held by the say US shareholder, whether or not the dividend is paid. So the moment it is earned, it becomes taxable. For the balance profit also, there's a minimum tax that has to be paid, which is in the range of 12% to 14%. Now, for this type of company, because it's a subsidiary company, it might be paying taxes in the other nations as well. For example, India or other nations. For the taxes paid in those other nations, there will be a tax credit available. Correct? Now, if we go to the next slide. Correct. Now, this is something which we need to understand. So we understand the transfer pricing provisions, right? So in terms of transfer pricing provisions in India, so if you just focus on the blue highlighted one, this is the most important one. What happens in India, the primary adjustment which is made in the transfer pricing, suppose there's a profit that has been added by the assessment officer, assessing officer in the transfer pricing assessment. On that addition, you have to again pay the taxes on the primary adjustment itself, right? But in USA, on that additional primary adjustment, you have to pay an additional tax of 20%, and it could go as high as 40% in case of misstatement, which is a large one, like it is also in India in case of secondary adjustment, right? So the gist is India may, so you are just going to get additional tax burden on the additions that are made. But in USA, you are going to be taxed on the addition on an additional tax basis, right? Plus, in case you fail to file the returns, there's a additional cost of $25,000 per year, irrespective whether there's a a markup or markdown of profits or not. You are again going to be penalized for the non-filing of return, right? So what can be the area of practice, or what an Indian practitioner can do? They can take a advanced ruling kind of mechanism and save a lot of money here, right? Now, what is the US filing calendar? How do you actually file returns in USA, right? When are you required to file returns? And so if you go to the next slide, please, Rohan. Yeah. Yeah. So filing calendar is pretty simple right here. So whatever is the due date, you get a 6-month extension in that due date. Right? It's automatic. There's no nothing. The only condition is that you have to pay the taxes on the due date, and you can file that returns even after the 6 months. There's of course the penalty payment. There's a late payment cost of 0.5% a month, and late filing fees can be very high. It could be 5% a month, right? So let's understand what are the dates. So the dates are 15 March for a partnership firm and S corporation, right? For C corporation and for individuals, it's 15th of April. In fact, for every other person, it's 15th of April. In case of non-residents and foreign companies, if there's a business income as well, it becomes 15th of June. Right? Now, there's one more point of difference in terms of advanced taxes. So like in India, we have quarterly advanced taxes. There's also a concept of quarterly advanced taxes. So what is the point of difference? That for the last installment, you get a 15 days ka window. You can pay the advanced taxes by 15th of January. Although the financial year or the calendar year in their case has ended on 31st of December, you still have the window of 15 days here, right? Now, this is something which most of the people are aware of, right? Or you get aware of. The real penalty does not start on this return filing. It actually comes on the information that you were supposed to file, right? If we go to the next slide, that is what we have tried to capture. Yeah.
Suraj, what is this foreign bank account as a taxpayer?
Yeah, I'll come to this. So these are the penalty that one gets to face. So for anyone,
No,
suppose there's a,
I am telling you the last slide, earlier slide. In earlier slide, you told that taxpayer is foreign bank account.
Mhm.
this seventh
No, sir,
taxpayer.
this is not the, no, this is not the taxpayer. This is the reporting that one needs to do.
Okay, okay. So actually,
Yeah, yeah.
yeah.
So that's why I skipped to the next slide because वहाँ यहाँ पर भी हमने उसको ले रखा है.
Yes,
Right? That is just the time limit. This is what the penalty comes if you don't do it, right? So हम क्या सोचते हैं कि रिटर्न फाइल नहीं किया तो पेनल्टी लगेगी, right? But there are other things as well which you need to consider in case of US taxation, because if you don't do this, you are again going to be penalized, right? Irrespective whether you paid the taxes or not. Yeah, yeah, exactly. Like we have the FA in India, correct? So, for example, so the first one is foreign bank account, right? Right. So if you have a foreign bank account in which you have a balance of say $10,000 or more, in this case you have to report it, right? If you fail to report such a bank account, the penalty is $10,000, right? And it is far more if the omission is deliberate. In case of foreign financial assets, again, if it is upwards of $50,000, you have to report it. Non-reporting, again, a penalty of $10,000, right? If you have a share in a foreign company and that holding is more than 10%, right? 10% or more, in fact, then you have to report it. And if you fail to report it, there's a penalty of $10,000 per year, right? Foreign owned company. So if an entity itself holds a foreign company, right, there's a related party transaction, which is kind of the way we do it in TP as well. There's a $25,000 ka penalty, right? And if you receive a gift, right, if the US person receives a gift from someone, and the gift is over $100,000, there's a 35% penalty or a tax, right? So in India, it's different, right? It becomes a part of your income and you get taxed on that. But here, a gift tax again is there, which I also mentioned in the in the previous slides as well, right? But in case of invisible asset or intangible assets, it is not there. Correct? Now, these are not tax returns, right? So हमें लगेगा हमने tax return file कर दिया और we are good to go, right? The way we do it for FA in India also, right? But these are the forms, additional forms that you need to be very cognizant of and keep a close eye upon.
So this is for all US taxpayers or for resident and green card holders only?
So this is for someone who's required to report or file a return in USA. So if your डे काउंट से भी आप अगर बन गए तो आपको करना पड़ेगा. आप ग्रीन कार्ड होल्डर थे, आपने ग्रीन कार्ड होल्डर सरेंडर नहीं किया और आप वापस चले आए तो आपको जिंदगी भर करना पड़ेगा. आपने ग्रीन कार्ड को सरेंडर कर दिया तब भी 10 साल तक करना पड़ेगा.
और जो नॉन रेजिडेंट्स है उनको भी?
Yes, sir. If you are required to pay tax because of any trigger,
Okay.
you are required to do this as well.
So suppose,
And in case of green, sorry, sir.
suppose as a non-resident,
Hmm.
say I am required to file the US tax return because I have year's income, but I
Yeah.
also have certain bank account in India.
Yeah.
So those bank accounts are also required to be reported.
Yes, sir. Yeah. Yeah, if you become a resident in that case.
No, because I am not resident, I am non-resident only.
नहीं नहीं
I'm
सर,
not
यहाँ पर अगर आप
satisfied
देखोगे ना, हाँ यहाँ पर लिखा हुआ है एनी पर्सन हु इज अ यूएस पर्सन. सो प्रॉपर नॉन रेजिडेंट विल नॉट बिकम अ यूएस पर्सन.
Okay.
हमने cover नहीं किया.
Right? Sir, if you
Yeah.
Any
Those
US
penalties,
okay, okay.
those penalties we have not covered here actually. They are minimal for NRs. Here we are only talking about a US person.
Yes.
Yeah. So this penalty is only for who? For the
Yes,
US.
yes, by whom
The
you are,
green
yes,
penalty.
correct.
So very nice, I think, Suraj. Let's now understand what are the carryaways that we have taken. Maybe if we can move to slide number 34.
34.
What is the things that we are carrying today? और ये बहुत ही simple था. हमने इसमें 6 things and that we covered today. One is the status and the source. Status में हमने पढ़ा who is the resident or citizen of US. And we also talked that in case you are a citizen or a day count resident, the global income is liable to tax in US. If you are a non-resident, either as an entity or an individual, only the US source income is liable to taxation. Then under 2, we discussed about the US taxes citizenship. 3 tests that we applied. 1, if you are born or domiciled in US. Number 2, if you are a green card holder. Third, by the day count method, which is based on the 3 years day count. So the US taxes citizenship is determined basis these 3 tests. Then third we saw was the characterization of the income. Of course, all other incomes are very simple wherever they are earned. If it is in US, they become the US source income. The characterization challenge could come where it is a royalty or a technical fee, where it is actually rendered and to what extent it is making available, and is the royalty related to a product which is, or a royalty is related to something intangible which is registered in US or not. So characterization there could be different. Otherwise, anything earned from the US is liable to tax. And fourth, very, very important as a practitioners, that nothing under the treaty is automatic. If we are claiming the benefit of treaty, as we do in India, we have to file a form that we are claiming the treaty benefit. Fifth, the penalties, they sit on the reports, they are not on the tax. Penalties are all fixed in US dollars. Unlike India, it could be minimum of 10,000 for a US person, and it could go up to a figure which could be as high as 50,000 or above. Sixth, the silent killer or the silent risk is, this is basically for the non-US persons. And why we are now taking up this in a very significant way, because earlier people were not aware of the ESOPs being reported or ESOPs being asset. But of late, a lot of judgments, not only in India, but in US and countries like Canada have come up, wherein the ESOPs in the form of either RSUs or in the form of any other stock options, they are part of the estate. So let's be very, very careful about the estate duty, 40% tax relief. And this is what Suraj and Kanika that we discussed. So if there are any questions, we can take up. And also two very important things, Bhupenderji, not for this time, but any time else, that our Canadian team, they have also agreed to give the overview of Canada tax in any month, whenever you, with the only challenge that, you know, when our is a daytime, they have a midnight or a nighttime. So
Okay.
we will discuss how best. And second, Kamal sir has agreed that he'll also be taking up a session any month on the payroll, end-to-end payroll and the payroll taxation along with the labor code.
Yes, so basically, in the month of September, I'm trying to organize 3 or 4 webinars. Generally, students will not be available because of the audit season and all that. But maybe that this payroll related things I can organize in the partners meeting as a webinar. That is one thing. And this Canadian tax, once this audit season is over, we will work out that when we can take it.
Correct. Correct.
Yes, yes, yes. So I think
So
it
I
was.
hope in today's session, yeah, we try to cover up the map. Hope
Yeah,
you know,
yeah.
it clarifies.
Yes, in fact, I have attended the entire session, and those 6 takeaways, in fact, that is what I was feeling. I have not seen this last slide, but that is what I could understand from the entire presentation which we had, be it the residential status. So even suppose someone is once a US resident, and until and unless he decide not to be a resident or not to be a green card holder, he will be treated as US resident and his global income will be taxed. That is what I could understand from.
नहीं, इसके अलावा उसे छोड़ भी दिया तो भी अगले 10 साल तो वो रहेगा ही रहेगा. That's the
हाँ,
only
अच्छा.
condition.
हाँ, वो उसके बाद 10 साल तक भी वो है. So what I feel is that comparatively the cost of US taxation is very high
Very
as compared
well.
to the Indian taxes. That is what.
और merit का भी बहुत ही important है. That Indians
Yes.
are so successful getting awards every year.
Correct. So if they are filing the returns jointly, one can say yes, they are still married.
नहीं, चालाक तो है, देखो स्मार्ट है. डबल स्टैंडर्ड डिडक्शन, डबल थ्रेशोल्ड, चाहे वाइफ की इनकम है या नहीं है.
Yes.
Okay, yeah. So today we have these books to be presented to the speakers. The title is The Richest Man by George S. Clason. And then we have another very beautiful book, The Power
Can you-
of Your Subconscious Mind. So,
It's the power of your. Yes. Can you just show
Yeah.
it on your? Can you just remove the presentation first from
oh, yeah,
slides?
I mean, presentation.
Ron will remove. Yeah. So that your video can properly appear here.
Is
Yes.
there a better visibility?
Yes, sir. So these
And
two books
this is the
are.
second one. Yeah, second.
Yes, sir.
तो हम ये सब कह रहे हैं इतने सेशंस के बाद we need to be rich and we need to also understand the power of our mind.
Yes. So thank you, Suraj. Thank you, Kanika, for the beautiful presentations which you had. And Jaykumar ji, you can send me the photographs also when you click while presenting it to them. And I think there is some question answer session. So I will share the that quiz link also with the team JKT so they can attend on the US taxation.
Sure.
Okay. Thank you, everyone. Thank you.
Thank you, sir. Thank you, everyone.